Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Fronti.
Well, Don Getling and Gino Fronti with the Don and Gino Real Estate and Finance Show would like to thank you for joining us every Saturday, 9 a.m. to 10 a.m., giving us the opportunity to share with you what you need to know, want to know, and should know about real estate, finance, and so much more. Even your community, we're always here with you. We live here, love here, work here. And we're accountable to you here at Skyline Home Loans.
No, we appreciate you joining us and listening to us. And hopefully you've taken heed over the last 5 years. The advice we've given out over the last 5 years could have saved your real estate, could have helped you invest in real estate, could have helped you save a lot of headaches if you've had somebody pass because of all the trust attorneys and all the life insurance advice that we've given, how to get out of debt for so many people, how to consolidate debt into a refinance. We've given out so much advice over the last 5 years. I feel very, very confident and excited about what we bring to the show.
All right. We'd love to share that with you because we actually log all these in YouTube videos. And we have over 1,500 YouTube videos on donandgino.com, DONANDGINO.com. Gino's holding up our crystal ball. I know why.
Oh, see, I even had to move the mic away to hold the crystal ball because it's been pretty clear. Crystal clear. We've been very, very good. I think so far with all the projections we've made in the last 5 years, we were off on one when everybody was projecting rates to rise.
Oh, yeah.
And then they didn't because of things that happened unforeseen in the global economy.
Right.
Here, based on what was happening here in the States, rates should have risen, but they didn't, which actually brings us kind of full circle back to today, doesn't it, Don?
Yeah, because, everybody projected. We're talking NAR, CAR, Fannie Mae, Freddie Mac, you name it. Everybody said the interest rates were going to go up this coming year, this year that we just went up in the 5% range,
Yep.
And that the Fed was going to raise interest rates 3 to 6 times.
Yeah.
Didn't none of that happen.
No, we just saw one raise. And we're all fairly certain we're going to see one in December.
Yeah, which is only 0.25%. And that is on short-term rates. That's on credit cards. That's on auto loans. It's on your equity lines. But it doesn't automatically mean that long-term rates are going to go up. But we do feel that I think they are going to slowly start inching their way up a little bit.
Right. We started to hear for the first time in over a decade the I word.
Yes.
And
inflation.
It's not just here. It's starting to come around.
Oh, yeah.
Listen, we've been
China
pumping money into the world economy. Fake money, you might want to call it, right? We've been using stimulus. Almost every government has used some form of stimulus to try to create inflation. And it's been nearly impossible. They haven't been able to create any of it. And now it's finally starting to come around where we're starting to see a little bit of inflation. Now, we need a little bit of inflation for growth.
I know a lot of you out there going, why do we want inflation? That means prices are going up. Well, that also means your wages are going up, your values in your homes are going up, and so forth. It's not all bad.
No, inflation is a key factor in long-term growth. We need inflation. We need it to be around 2 to 3%. That's the Fed's target rate. It's been anemic. It's been like 1% or less over the last decade. It's been a problem. Japan knows all about it. They've had no inflation forever. It's been disastrous for their economy. So creating inflation is good. Now, the question is, do we end up in a situation like we were in the 70s where we've created so much stimulus that we actually have an inflationary problem? And that's what the Fed's going to try to stave by making sure they raise rates as they need to.
Well, I think we tend to get ahead of the game a little bit better, but also we're affected globally. When it's micro, like only our country controlling all that, it can be a little bit more volatile. But now that it's a global economy, it keeps it a little bit more in check at times.
Yeah, I think it should definitely smooth out the erraticness that we had with inflation over the years. So I think inflation, you see a little bit of it. So rates rise a little bit, into the low to mid 4s instead of the high 3s. And that's not a bad thing.
Right. All right. So we were talking about, we wanted to share with you some numbers that came out of CoreLogic regarding property values, basically appreciation. And we've been telling you for the last year, really, that the leading the pack has been the Pacific Northwest. Oregon, Washington, and also Colorado been just smoking hot over a double-digit appreciation. And now CoreLogic gave us their projections for next year. Now, again, these are just projections. If you listen to us daily or you go to nrecafe.com, we actually give you a daily video what's really happening now. So you actually are in the know what's going on in the financial markets and the real estate markets and so much more. Again, nrecafe.com. All right, so last year we had the double digits. What was amazing when I was looking at this report is, believe it or not, Washington and Oregon are going to go from double-digit appreciation levels to almost half.
Okay, but that we've talked about that in the past before, Don. That happens every time you have massive appreciation. It's hard to have massive appreciation on top of massive appreciation. Right. So that means that market's going to start normalizing, like we did here in California for what, the last call it 2 years?
We did that because we were really
we were smoking
17%
hot.
at some point.
It was crazy. Yeah. And so we normalized in the last 2 to 3 years. We've seen a nice 5 to 6% growth here in California over the last couple of years.
Which is healthy. Again, you don't want the big peaks. So it's actually good, and especially really good for the Pacific Northwest. There's in such short supply of homes right now that right now you have to pay between $1,100 to $5,500 for an appraisal.
Yep.
It's $450 to $500 here in California.
Yeah, well, I expect that. Remember, I think as we analyze that when we started to look at it, I think that that's something where we've had no inflation in the cost of appraisals over the last 2 decades. It's crazy.
It's not fair for them.
It's not fair for them, and I know they can't operate in their regulatory, how difficult it's become to do an appraisal.
I know we even may add more. More has been added. We don't do it, but more has been added to their job.
Yeah, it's become increasingly difficult, which means they can do less appraisals, and they've been charging the same price. That's not fair. So that's actually one other way that inflation sneaks into the market is when you're not able to do as much. For example, like when they shrink your water bottle instead of raising the price, that's inflation too.
Yes, it is.
Yeah. So I think you see probably appraisals go to somewhere around $750 here in California sometime soon.
Okay. So the other news that was interesting is places like, believe it or not, California. We've been chugging along right around that 6% range, which is fine. But surprisingly, it's projected to be at 9%, almost leading the pack between us and Nevada and Florida. Basically, going to be leading the pack for the most appreciation across the country.
Now, I know I was shocked, right? Because I said, wait a second, why are we going to see an increase in appreciation? Why are we not going to stay stable, Don? I mean, we've been at this nice 5 to 6% clip. It should be good. Why aren't we going to stay stable?
Well, bottom line is we haven't had enough home building, for one, and our supply. And once you run out of that certain supply level, there's no other place but prices to go up. We don't have enough homes being built right now, and California is still popular, and there's still pent-up demand, and therefore the lower inventories at lower prices are being sucked up to where now we have nothing left but appreciation.
So let's talk about that for a minute. So what it takes to build something in California due to environmental regulations is that much more difficult than anywhere in the country. So what's happened is those projects that were started and shelved and not finished, but they already had their entitlements. There was all these half-started projects that we were able to build out over the last 5 to 6 years. All those projects have been built now. So now everything's ground up. And so if you're doing ground-up startups now for building, you're probably looking at least another 2 or 3 years before it hits the market.
All right. So before we leave you, we're going to go to our next segment with Lisa Odom. She does so much for us, but she works at Poole and Shaffrey, our estate planner, trust attorney, real estate attorney, corporate attorney, you name it, she's got it. She'll be here to share some great information as always. But we want to leave you with this, is that if you're afraid to get in the market, don't be. It's a great real estate market. Everything we see, and we've been pretty good for 5 years now, not just 1 year, 5 years now of projecting where we're at with the real estate market. We believe we have a couple more years at least, if not 2 to 3 more years, because we're actually behind standard appreciation levels by a couple years, believe it or not. Even though we had the slowdown, if you were to take the 3% to 4% on an annual basis, we're actually not caught up to what we're 3 years behind still? Yeah,
there's areas. I mean, it's interesting. When you look at Los Angeles Metro is already, because of the redevelopment dollars that have gone into Los Angeles, it's unbelievable how much prices have risen even in the San Fernando Valley, because it's an adjacent valley. And then now that's going to trickle over into us little by little. But, when you look at California as a whole, unless we have an earthquake, it's still a great place to live.
I believe you said the E word.
Well, hey, I threw the caveat out there.
Yeah, we got earthquake insurance now.
Well, I'm just saying, the reality is, if I hate to say it this way, but in 1994 when we had the earthquake, it's like a cockroaches with the lights on. People leave. They get scared and they leave.
Yeah. Colorado got real busy.
Yeah.
All right. So we have a great guest coming up here. Lisa Odom with Poole and Shaffrey. She's been on our show numerous times. She's part of America's Professional Resource Group. And she's always got great wisdom, great ideas, great information that you need to know to protect and educate your family. And this is something you're going to really want to listen to or watch. Remember, this is live. You can watch this by going to donandgino.com, DonandGino.com. Click on the live streaming button. Check out our YouTube channel. There's 1,500 videos. Go to nrecafe.com, aprgi.com. We have so much information.
You did say a lot of acronyms there. So
Yes.
just donandgino.com is the hub. I direct you to donandgino.com, and you can get to any one of our sites, any one of the things we're involved in from there.
All right. Stay tuned. We have Lisa Odom with Pool and Shaftry coming up.